space companies can be counter-cyclical. Like, a lot of people think that investing in space companies is really risky, but actually there is a lot of protection here. There's a lot of demand on the enterprise and government side, and that helps these companies to continue to generate revenue and grow regardless of market cycles. And it was playing out, and we were saying, see, this is why it's important to have government as a customer as well.
From the Defense and Aerospace Report, this is The Downlink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. We're now in the longest U.S. government shutdown ever, day 38. At the time I recorded this intro. And this week, the NASDAQ is getting hammered. And why do we, space and defense nerds, care? Well, the NASDAQ is the bourse upon which most publicly traded space companies are listed. If you're looking for why the hammering is happening, we've got a basket of reasons, and none of them have to do with the space sector. First, according to a report from the outplacement firm Challenger Gray & Christmas, in this just past October, employers said they're laying off more than 153,000 employees. It's the worst October for layoffs since 2003. And consumers aren't very optimistic either. According to the University of Michigan, which tracks consumer sentiment, confidence in the economy dropped 6% over the month, and it's down nearly 30% year over year. According to the university's data, worries over personal finance and the business environment are dimming expectations. And the fact that Tesla's board approved the largest pay package ever, about $1 trillion for its CEO, Elon Musk, well, that's dragged the company's stock down by more than 4%. And Musk is also the CEO of SpaceX. So let's talk about the market traders and investors. What else is sapping their enthusiasm? Now, according to reports, analysts and traders have decided to take a closer, a more cynical look at the valuations of tech companies, specifically artificial intelligence companies. The complaint is a lot of these AI companies have talked a good game, have sold speculative narratives to pump up their perceived value. But investors want less good idea fairy dust and more real revenues, sales, and back orders on spreadsheets. And that's a really good place to introduce this week's guest. We've got Chad Anderson of Space Capital. Now, he recently wrote a piece for Yahoo Finance and is claiming that the space sector, investors, and the investment category have both matured. Private equity investors are no longer placing speculative bets. And when they look for companies with customers, contracts, and clear pathways to profitability, they're finding them. Here's our conversation. Hey, Chad, thanks for making the time to come back on the Downlink podcast.
Yeah, great to be here, Laura. Thanks for having me.
You know, it's been a while since we've had the pleasure of hosting you. So it'd be really great if you could take a moment and introduce yourself, like what you do, where you do it, how long you've been doing it.
Yeah. So I am CEO and founder of Space Capital. We are a seed stage venture capital firm investing at the intersection of space technology and global markets. We have been investing in this category for over a decade, founded the firm 13 years ago. So have been at this a while, just launched our fund 4, and we have a fund 0. So technically this is our 5th fund. So
explain what your fund is, though. What does that mean? Like fund 1, fund 2, fund 3, fund 4? I mean, it's almost like a ride at Magic Mountain.
We're a venture capital fund. So what we do, our business is to raise capital from institutional investors. That's corporations, insurance companies, endowments, pensions, family offices, and a whole host of other investors. We raise capital from them. They commit to our fund. We take that, we call those commitments and invest them in investment opportunities. We are a seed stage fund, so we are investing at the earliest stage. We are usually investing when the company is being founded or shortly thereafter. So there's a lot of betting on the team and making sure that you got the right team, focused on the right problems and they don't really have everything figured out, right? And so we invest and then support those companies as they start to build out their product and their business and take it to market. They find product market fit. And then usually other investors who are specialized at later stages will come in and invest in those companies, and then take those companies and help support them. And then we will stay involved, but less so as they grow.
Now, it's not like you weren't busy enough, but you also happen to be the host of the Space Economy podcast.
Yeah, we got a lot going on over here at Space Capital. We have, we were early to a new category. I mean, we were founded right about the time that SpaceX was coming online, and SpaceX enabled this category for entrepreneurship and innovation and investment. The market was pretty limited before that. So the importance of SpaceX, what they had done, how they had removed the barriers to entry, how that was enabling new entrants to enter into this market. SpaceX completely changed the game with their Falcon 9 vehicle. But investors, and founders, new companies didn't necessarily recognize that early on. And so we invested a lot of our time and energy early on into market research. And then we published a lot of that research to help educate, help people understand the opportunity here, the real risks and opportunities. And so research has been a key part of our firm's culture since the very beginning. So the podcast is one piece. We've written the Space Economy book. We have long form reports. We have the Space IQ, which we publish every quarter, which is the Space Investment Quarterly. Talks about startup activity and investment trends.
And you've got a jobs board, which if any of you out there are looking for a job, I got to tell you, it's a really easy jobs board to use. It goes through, you can look at categories, stuff like that. So, I reached out to you specifically because of a piece you recently authored that I think really deserves a deeper dive. And that's the piece on Yahoo Finance. It served, of course, as a vehicle to drive traffic to your quarterly report, which is fantastic. Again, I recommend it to all who are listening. It's an easy read, lots of big graphics, comparatives over, since 2009, I think it is, on one side, and others, the other side, the left side is for the past 36 months. So it's got a lot of insight. But to get back to your piece, right, you echoed what both Chris Quilty and George Pullen have said on this podcast, that many space companies are experiencing, and that it is a strong interest by investors to get in on the action, both in the private markets and also in the public ones. And that's because the space economy is growing. Lots of military contracts are expected. And you focus a lot on startups and manage private capital. And in your report and in that piece, you reminded all of us that the space economy grew rapidly in 2021 during the SPAC craze, which I suppose is a snarky way of putting it, but it kind of was, right? Then there was, the COVID slump, which was cross-cutting across all economic and industrial sectors, except, live streaming meeting apps. And now the space economy is growing again. But you say that this time is different and that the difference is actually quite fundamental. And I want you to unpack this. What's different and what's fundamental about that different?
Yeah, it's a fun question to unpack. So 2009, why do we start there? That's when SpaceX came online and launched their first customer, right? So that's a really good place to start tracking startup activity and investment trends. We're tracking $393 billion invested into the space economy across 2,300 unique companies over that period, right? So that kind of gives you a sense of scale and like what's going on here. A lot of that has come in the last 5 years. So SpaceX comes online in 2009. We see some decent growth, slow, steady growth in the beginning as people start to recognize this change that's happened and start to take advantage of it. In 2015, things really start to accelerate when SpaceX starts landing their rockets and reusing them again. So we have more launch capacity coming online, a significantly more amount. That's also when Google and Fidelity put $1 billion into SpaceX for their Starlink program, which it wasn't called that then, but it was for a low Earth orbit constellation of satellites. And so now we started to see real money coming into this space from, big corporations and investors who wanted it on the action, right? So 2015 was a key inflection point. And then things started to really grow from there until 2021. The capital markets were white hot, not just in space, everywhere. Capital was very cheap. A lot of things were getting funded that, didn't make a lot of sense at prices that didn't make a lot of sense. And so this was a really sort of exceptional market. And this is when we started to see a lot of capital markets detaching from fundamentals. And we saw SPACs. Space companies were actually, the first to really put SPACs on the map and use them in a big way was Virgin Galactic. So, and then many other space companies followed suit, as well as, other companies in other categories as well. But a lot of those didn't work out so well. SPACs generally, it's a very interesting sort of structure that we probably don't have time to get into here, but there's a real misalignment of incentives and the people that are underwriting those investments, which has sort of been corrected by the regulators, but back then it was not. So you had a real misalignment of incentives. It was really just kind of, you could promote anything and raise capital for anything. And that's what happened. This was a new category. People were really excited about it. There was a lot of hype. So we saw a bunch of investors pour money into things that I think that they didn't really understand. And then that played out kind of as you would expect. Most of those companies didn't work out. A couple of them did, Rocket Lab and Planet. But interestingly, when the market corrected at the end of 2021 and in 2022, all across technology, everyone was starting to pull back. It was like, wait a second, what's going on here, right? Like, let's pull back. All the big tech companies had gone out and hired way too many people. And like, there was this huge talent, war for talent. They hired way too many people, paid way too much money for these people, and they had really overextended themselves. So in 2022, everyone was pulling back. No enterprises were spending money on new products. So like as a startup, it was really hard to get any enterprise revenue. Consumers were feeling the heat, right? Because they had lost a bunch of money in the stock market and whatever else. So consumption on the consumer side was down. Enterprise revenue was really hard to come by, as we had these mass layoffs. But who stepped up was governments. So we had Russia invaded Ukraine, and this was put a real spotlight on the capabilities of commercial space companies. Satellite communications, keeping the Ukrainians connected. Earth observation is what gave us a first glimpse into like Russia was invading, and then helping us to understand what was actually happening on the ground when Russia propaganda machine was out saying this happened. And we were like, well, no, it didn't, because we
have the pictures
exactly.
of Bucha. Yeah, no,
exactly.
And then
GPS,
we've got Viasat as well, and that's an American company that got attacked. So, no bueno, and we have the receipts.
GPS is a key piece of this. Like, we know that in conflict zones, GPS is the first thing to get attacked because it guides everything from troops to equipment to munitions to everything else. So it really put a spotlight on the growing capabilities of commercial space companies. And we saw this because when in Q2 of 2022, when the financial markets were in their steepest decline, it was basically like all stocks were like on a free fall. Our portfolio companies were putting up record revenues. Planet, Rocket Lab, these are publicly traded companies that are now, having gone public, you could now see their revenue. Like, they're out publicly talking about their revenue, and they were talking about how they were putting up numbers that they'd never put up before, and this was really driven by a lot of government demand. So early on, we were saying this is like showcasing how space companies can be counter-cyclical. Like, a lot of people think that investing in space companies is really risky, but actually there is a lot of protection here. There's a lot of demand on the enterprise and government side, and that helps these companies to continue to generate revenue and grow regardless of market cycles. And it was playing out, and we were saying, see, this is why it's important to have government as a customer as well. You also don't want to be all in on government, but it's helpful to have them. And then you started to see everyone else pile in. So all across venture capital, everyone started to wave the flag of defense. We started to see a lot more dollars going into defense, a lot more investors willing to fund defense-focused, dual-use companies. And then, fast forward to today, where the geopolitical situation has turned on its head, and everyone is vying for sovereign solutions in the US, all across Europe, and in other places, which is driving a ton of demand, from all the initiatives that are happening in the US to the rearm plan in Europe, and then again, all across the world. So, yeah, so defense is a key driver, has helped these companies throughout the market correction of 2022, 2023, and has really been continued to be a driver of growth into 2024 and 2025.
Okay. But what's the fundamental? Because you said things are different. Now, when you're investing, you look at fundamentals. What has fundamentally shifted for you?
Well, I mean, there's a couple of things. I mean, when we're talking about fundamentals, we're talking about like actually having companies raising capital at prices that are based on revenue or income, right? So you've now got companies that aren't just out storytelling. You've got companies that are generating real revenue that's coming from enterprise sales. In space, it's usually coming from enterprise and government sales. You like to have that healthy mix, but you also like to see that, people are not out selling things for less than it costs to make them. You got a lot of really great technologists out there that are interested in building spacecraft or other space technologies that don't understand business and unit economics, right? And it's actually surprisingly easy to sell something for less than it costs to make it. That doesn't make for a great business, right? So we've now got kind of that history was important because in 2021 there was a new category, a lot of new investors getting involved in the category for the first time. There wasn't a lot of differentiation. It sort of felt like if you looked at all the publicly traded space companies, they were all kind of like following the same path together. It didn't matter if one was generating, had better fundamentals or not. It was like it seemed like investors were painting all these companies with one broad brush. Fast forward to today, a few years later, and the markets have started to differentiate, right? If you look at, like, for example, of that 2021 cohort, a lot of that hasn't worked out. Investors have pulled back. Meanwhile, Planet and Rocket Lab are putting up great revenue numbers, and their stock price is starting to reflect that. So we're starting to see some differentiation. We're also starting to see in 2025, the IPO window is starting to open up again. We're starting to see some companies go public, the more traditional route. We're also seeing a lot of acquisition activity. And on the public market side, I mean, again, there is still you can tell there is a lot of excitement and enthusiasm for this category. When companies go public, people are really like anxious and eager to put money to work. But then the stock price will inevitably is starting to reflect their fundamentals, right? And we've got companies out there that have gotten public this year that are telling a really great marketing story. They're really like leaning in on the hype and the PR announcements. Meanwhile, they're not generating a lot of revenue, and even less of that's falling through to the bottom line in terms of income. So,
and it's reflecting in the drop of their prices as well,
exactly.
Right? And they're actually paying attention to the news. I mean, I hate to throw Firefly under the bus because what they're doing is hard. It's really hard. It's really hard to launch. And they had a success too.
Yeah.
So it's not like all gloom and doom. I mean, they're an amazing company, but yeah, people are paying attention. They're not just investing in the hype and they want to see results. But they're also buying into the risk, right? I mean, going to space and doing stuff in space, things are going to go boom, and that's why you test. All right, just to keep going. I wanted to ask you though, because you said that this market is more mature, that it's more adult, that people are looking at fundamentals. People are saying, hey, where's the beef? So I'm wondering about the sustainability versus the fragility of this growth. Is it recession proof? Right? We've had some people who are market watchers saying, hey, things look like they might get a little dark. And that's probably just a few people with, who speak more loudly than others in the room. But I've heard it on Bloomberg today, right? So it makes me wonder, and you were saying, space is counter-cyclical. So I'm wondering, hey, is this growth in investment, this growth in smart investment, recession-proof?
Well, from our perspective, absolutely. And I mean, our fund performance reflects that. I recognize that there's a lot of people who are new to this category, but this category is no longer new, right? Like I just said, we're launching our fifth fund. We have a long track record, a decade plus track record of investing in this category. And our fund performance is top decile versus benchmarks like Carta. You can take our fund performance and benchmark it against all the funds in the world, investing in all kinds of things, general technology, SaaS, enterprise SaaS, the basics, cloud technology, that sort of thing. You benchmark us against that, and our performance is top 10% in the world consistently. And how does that happen? I mean, that happens across, it has happened across market cycles. And again, it comes down to, in our experience, that we're focused on enterprise and government customers, which continue to buy insights and information. And actually, they buy more of it when the world becomes more dynamic and uncertain, because you need information and insights to understand the challenges and address them. So when a ship, for example, like the conflict in Ukraine that we talked about earlier, when a ship gets stuck in the Suez Canal and disrupts global supply chains, what do you turn to? Space technology, right? So,
Right.
And this is consistent across, global challenges. Satellites provide us with a unique perspective to see all kinds of things. And that's primarily what we're investing in. When I say we're investing at the intersection of space technology and global markets, I'm primarily talking about satellites and satellite infrastructure that's in orbit, and also the data that's coming off of those satellites and how that data is being used and powering the world's largest industries. And so I think that's kind of the common misconception about, like, when people are new to this category, when they're thinking about space, they're mostly just thinking about the companies that are going to the moon or building commercial space stations, right? They're not thinking about the companies that are already the invisible backbone of the world's largest industries today.
Or the end user applications of it, right? I mean,
Exactly.
that's one of the things that I really love about your report, is that you really flesh out the value chain of space systems, which is just wonderful. It's another thing, though, that you say in your report that I want to kind of throw at you, and I need you to be a bit efficient, because we are, the clock is ticking, right? But one of the things that you really lean into is that the market is getting more mature, because there's a lot more investment into clear ideas and things that are proven, because the U.S. government, primarily the U.S. military, as opposed to NASA, is sending up a huge signal saying, hey, we're going to be buying, and we're going to be buying really, really big for Golden Dome, which is AKA next generation missile defense, or tiered missile defense, as some others have been calling it, right? But here's the wrench that I want to throw into this and throw at you and see what you have to say, because it's clear that there's huge anticipation of a gargantuan 2026 Space Force budget, right? And it's tied to the Golden Dome. And it could be as much as $40 billion for 2026. But in that presidential budget request, there's no projection for what the administration will ask for the following years of this project. There's no projection of what the funding requirements will be past 2026, which actually, that sort of stuff, that sort of data has been tradition in past budget requests, but it's missing in this budget request. So there's a lot of criticism from the think tankers where I am. I'm in DC, you're in New York, right? So I'm a bit closer to the cranky, critical folks. But yeah, the think tankers say that, hey, this looks to us like a one-time sugar high. And maybe it is. So the question I have for you is, well, okay, well, maybe it's a one-time sugar high. Is that one-time sugar high enough to really kick off a dual-use sort of market that actually could sustain itself, whether or not Space Force is, $26 billion or $40 billion, that it can survive and thrive and continue to grow at this pace with or without the military?
Yeah, you're asking the 25 or 175 or $500 billion question, right?
Well, it's what I do. So, but it's a question.
No, it's an important one. I mean, what was so interesting from my perspective in Q3 was how this administration has sort of turned its back on civil space, seemingly. Like, it seems to not be very interested in NASA at all.
Or they
Like
can't find
proposing to,
an administrator who's willing
yeah, I
to
mean,
really,
have
drive that ship because, I mean,
they also don't
it's
seem interested in doing that. Like there's a part-time person there, and fine, just keep it rolling, I guess. But also at the same time, proposing to cut its funding in half. Meanwhile, it's just so interesting to see how fast the Space Force budget has grown, and how there's so many, like, there's just general consensus to continue to fund that and grow that budget, right? So you've got 40 billion proposed for Space Force, and it seems to continue to be like there's a lot of appetite to continue growing that. And then when is this going to post, and like will it still be that when this posts? The situation is that it's all over the place, and we don't know where things are going to land. And that's kind of the point, is everyone is vying for a piece of this golden dome, because it's supposedly, I mean, the ambition of it, if you just like think about what it's going to take to do like this sort of ambiguous massive missile defense goal, like you start to like imagine what it'll take to pull that off. It's very big, and there's lots of opportunity for lots of companies to do different pieces of that, whether it's space situational awareness and traffic management, like knowing where things are, putting infrastructure in orbit to be able to intercept, like from the physical, there's like a ton of different ways in which you can imagine getting involved in this. And then there's there's very big dollars associated with those imaginations and those ideas. The problem is that's all it is right now, right? And everyone's like, we're now at the point where it's sort of like everyone's been talking about it for a while. Everyone's been sending, groups of their executives to these meetings and like getting little bits of information here or there, but nobody really knows how big this thing's going to be. No one really knows any of the details of the architecture. I think it's probably going to be like whatever the number is today. It's like a down payment on that, and it's already a large number. People think it's going to be larger than that, so everyone's vying for it, but we don't know. A lot of people made money in Star Wars, and have spent a lot of time talking to the folks who were involved back then, and a lot of money was made, and nothing really came out the back end of that. So there's a few different ways in which this play out, I think, where you've got that replaying itself, where we don't actually end up with a next generation missile defense system, but a bunch of new age defense contractors make some money in the meantime. Or we end up with something, and we start to build this system, and we have an administration change, and the next administration doesn't care so much. There's a lot of ways in which this could play out, and I think at this point people are just, any sort of details would be helpful in getting people to sort of mobilize resources if we're actually interested in trying to achieve this.
All right, going fast here. Next thing that I just loved about your report, hugely loved, and something that I didn't actually really know, so thank you. But that's the AI in space derived data. Yeah, I've been looking at AI in space, but not what you had brought up, which was Alphabet Inc. launched Alpha Earth Foundations. So I used Google Search's AI engine to have it describe it to me and what Alpha Earth Foundations is and does. It replied, Alpha Earth Foundations is a new geospatial AI model developed by Google DeepMind that processes massive amounts of Earth observation data to create detailed, high-resolution maps of the planet. And then it says, it functions as a virtual satellite synthesizing data from various sources to provide consistent analysis-ready information about the Earth's surface and environmental changes. All right, I'm going to go back to my regular voice. But you called its debut or launch a watershed moment. And this happened back in August. So I got to tell you, it was one that I missed. So I want you to explain to my audience why you think this was so important that it's a watershed.
Well, I mean, there's a few things going on here. One is we've got all these Earth observation satellites that we've had up for decades that are generating all of this massive data. And now with SpaceX coming online, making it easier to access orbit, we now have all of these new sensors from all the, from many different companies and many new satellites being launched. So a new and massive data set. There's just way too much Earth observation geospatial data for humans to get our arms around, to parse through, to derive useful insights from.
Oh, it's been a huge issue with the DoD. They know that they've got just masses and masses of data, and they just don't have enough compute power to sort it out. And they,
That's it.
fear that they're going to miss something that's important, like an opportunity that could actually give them advantage.
Exactly. That's
So
exactly right. And so we're at this really interesting intersection where we have massive archive of data, a massive new set of data coming online with more new data coming online all the time.
Golden Dome data is
And
going to be coming if it actually launches, right? I mean, that's going to be massive.
And now we can run it through an AI system and start to make sense of it, right? So this is the opportunity. With the advent of large language models, I think people assume that what it can do for language, it can do for other modals, like, for example, geospatial intelligence, but it does not have the data that is that the LLMs are trained on. Do not have those geospatial embeddings, which allow you to make to have those relationships and to make those connections. So LLMs are pretty useless when it comes to like directions and geospatial relationships. That is starting to change with new foundation models that are coming online. Clay was an open source model developed by a team that is now running a company called Legend. They're focused on this. They're based here in the US. There's another company called Globeholder based out of Paris, who are also focused on geospatial embeddings. And what Google is doing is really sort of like raising the tide for all boats and showing that there's a lot of value here. It's something that Google's really focused on and really building a big product suite around, and showing the value of embeddings and these new foundational models. They're basically making it easier to access for other companies like Legend and Globeholder to come in and help build the connective tissue now from what they've built to the end user. So this is really starting to put a lot of all of this geospatial information, Earth observation information from satellites, combined with other geospatial information, ground sensors, car sensors, our new autonomous future, robotics, navigating their spatial environment, starting to bring all of that together with what's happening in AI. And it's a very, very exciting space, someplace where we're spending a lot of time thinking about and deploying a lot of capital. So it's really great to see Google making this research public.
Now, when this episode posts, we'll have about 55 days left in the year. What are you looking for in the fourth quarter? What may be flying under the radar that we out here that are listening to you now, what should we be paying attention to?
Well, interestingly, so we focus on, three key technology layers: infrastructure, like, for example, the satellites that are on orbit, and also the application layer, which is really software products that are, for end customers and end markets, leveraging the data that's coming off of this infrastructure, right? Applications is really where a lot of the value accrues. And we've seen, and that is historical over all our entire data set. However, with this push for sovereignty across the world, we're seeing a lot of demand for infrastructure. And so in this article that you mentioned earlier, I actually misspoke and said that it was, infrastructure was a 5-quarter high. They looked and it's actually like a 7-quarter high or something like that. There is a lot of demand for infrastructure on orbit, putting new sensors on orbit, sovereign solutions. Not everyone wants Starlink. European countries are looking for their own solutions. We've got new competition coming online. SpaceX has enjoyed a decade plus of basically zero competition. We're starting to see new capabilities come online, particularly from Bezos's space ambitions. Amazon's Kuiper is beginning to come online. We're waiting for New Glenn's second launch, which is going to bring much needed launch capacity to the market. We've got other launch vehicles that are, hopefully coming online. Probably not in Q4, but hopefully shortly thereafter. So there is a lot, of momentum building here.
Chad, thank you so much for your time and for coming on the Downlink podcast.
Yeah, my pleasure. Thanks again for having me.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello, and get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.